Welcome to the Zone Weekly. This is the week of March 3rd, 2023. I am Showtime, your host, and I would love to go over some brand new data points this week that are exciting and new, as well as update you on existing data points. So for this week, we have total value locked to just under 12 million. That's a 5%, a little over 5% weekly growth rate. $575,000 over that actually added, with a total of 11.876 million to be exact. And those are the value locked from zones participating in the ecosystem, using the utility, and taking part in this new system that we built. And that's the value that is locked in terms of those zones from a US dollar standpoint, which of course is a little bit of a moving figure because of the fact that the token price can be anything at that time. Big shout out to Ray building the Dune Analytics once again. If you do not or have not seen the Dune Analytics, please go and check it out. You can join our Discord, and you can find it at xetacapital.com by scrolling at the bottom. Join our Discord and check out the stats channel. Ray is just a regular member of the community who has done a fantastic job creating this dashboard that gives you a set of data points. And speaking of which, he's created a new dashboard that shows some very interesting information. Shows what the DEX, the decentralized exchange, and the OTC data looks like with and without buybacks and without any kind of front-running bots, which are running rampant on the DEX lately, especially as well. And in there, he includes a few data points. I'm going to go over a couple of them in this Zone Weekly, but one of the first ones I want to go into is a USD coin raised from OTC. That number is at $600,000, and those are the XETA tokens that the team, the company, sells on OTC. We list them, and folks have the option to buy them. Now, there's a very in-depth study into economics that I would encourage everybody to go and check out. It's Keynesian versus Austrian economics. The vast majority of nations around the world operate inside of the Keynesian economic structure, which believes in an increase in inflation, as well as more government control, where they typically print more currency that is not backed by anything and doesn't have any value outside of what everybody agrees to and what the government essentially stipulates. That is Keynesian economics versus Austrian economics, which believes in less intervention from the government and less inflation and more deflation. Now, of course, this is a heavy debate. This has been debated for decades, but I would venture to assume that the vast majority of people involved in cryptocurrency and DeFi do tend to lean more towards the Austrian economic structure, which is why most people are trying to beat inflation and provide essentially just a better way of life inside of the Keynesian economic system. And I bring this up because we believe more so in the Austrian economic system of deflation rather than inflation. And listing tokens on OTC is a mechanism for deflation. Tokens that are listed on the DEX inside of liquidity, if purchased, then become part of the circulating supply. Circulating supply being what zones have emitted from the total value locked. And the reason being is because tokens that are on the DEX cannot be sold. They have to be purchased and then sold. So they're not, even though they're part of the supply, they're not part of the current circulating supply. Tokens, of course, minted on the blockchain are not part of the circulating supply. Everybody has kind of a different definition for this. However, circulating supply is supply that can be utilized right now in some fashion or form. You can buy liquidity, one side of the pair, off of the decentralized exchange, but you couldn't sell it unless you bought it first. So it's not technically part of the circulating supply that can be utilized and used right now. Once they're bought off of the DEX from the liquidity, then they become part of the circulating supply because somebody can then use them to participate in the utility, the HFT pools, build zones, which would actually effectively remove them from the supply, which I'll go into in a moment, or they can sell them back on the DEX. When tokens are bought back from the open market, they are also bought back from the high frequency trading. They are then sold on OTC. It's a form of mechanism to reduce inflation, increase deflation, and of course, allow operations, treasury, charity, and buybacks to get funded from another stream of revenue as well. And tokens that are purchased off of OTC can only be used to build zones or go into pools, which essentially going into building zones would take those tokens and put them back into the rewards pool anyway. So $600,000, again, that's split between charity, operations, treasury, and buybacks. It additionally helps fund more pools and grow the company. Another interesting data point is the weekly zone growth at 4.7%. It's another 807 plus zones. We are sitting at just under 18,500 zones since launch. Again, it's a very steady growth rate. It's not a wild chart where you see a lot of projects launch and all of a sudden go straight up, only to come straight back down, because the growth is not containable. It's not sustainable. It's not something that could be handled. And while we all love explosive growth, growth that is too fast can also be a problem. So we are growing at a very steady pace, and that number of actual zones is going up week by week. If you go back to some of the other zone weeklies, that's a very good sign. And that's zone count going up with the count already being higher. So it's exponential growth, which is fantastic and very manageable, by the way. Inside of Ray's new Dune Analytics that he built shows an interesting number. And this is not a number that folks have seen up to this point. Dune Analytics, the current one before today, showed open market buybacks in terms of token quantity, how many XETA tokens have been purchased, but not in terms of USD value. The new Dune Analytics, and it's more of a separate, not a new, it doesn't replace the old one, it's just a separate one, so please go check it out. It's more focused on open market and OTC data, including and excluding buybacks. So it's very interesting to look at. It'll give you a different perspective on the value being placed into the ecosystem. And you will see that over $1 million of open market buybacks have taken place. And as a matter of fact, it's slightly more because for the first short while, there were buybacks being done outside of the Gnosis safe, only for convenience factors. That's not shown on there. That's several hundred more thousand, between 200,000 and 400,000, I assume, without going and actually pulling the raw data. But what we have on a conservative level, at least anyway, is $1 million in open market buybacks. It's actually 1,056,000 to be exact. And a lot of these numbers, all of the numbers, as a matter of fact, are taken as a snapshot, typically Thursday of each week, late Thursday. This is recorded Friday, normally, as well. So when you go and view this and you listen, you watch the data and you look at what I'm talking about, you'll notice sometimes it's slightly behind what you actually see because it's a day behind, or at least less than a day behind, just slightly. So that's very interesting. Continue to look at the open market buybacks. Look at that new Dune Analytics. I think it will be an eye-opener for a lot of people. There's been $288,000 worth of buybacks just in the last 30 days on the open market. As a matter of fact, I can already tell you it's more than that, but of course that's just from last night, as stated previously. And of course we have average daily OTC volume. The OTC, the over-the-counter, the OTC system taken from ThorFi, big thanks to the ThorFi people again, just continues to grow in adoption, right? It is, again, a peer-to-peer mechanism for people to list their XETA tokens and someone to come and buy them. That's it. And it doesn't impact the open market, doesn't create volatility. The open market is a little, I'm going to use the word dangerous at the moment, only because there's literally several now I've seen front-running and sandwich bots on there. What a front-running bot or a sandwich bot, same terminology essentially, is when you go to place a buy order, if your buy order is large enough, the bot is monitoring it, can see your transaction on the blockchain, and sandwich their transaction before yours. Hence, it's called a sandwich bot or front running. What they do is they see your transaction, they come in before it, okay, speeding up their gas and slippage and different mechanisms they have of performing this, and then they can get their buy-in before you, meaning they could then turn right around and sell and make money. So imagine for a moment you place a $2,000 buy order for XETA on the open market, on the DEX, outside of OTC. The front-running boss sees it. They're able to perform a $5,000 buy that takes place before yours. Well, because it took place before yours comes after it, they've now got value because you raised the price after they bought, so which means they can then turn around and sell the $5,000 immediately and make an instant profit. And this is typically what happens, and people get sandwiched, and especially people going into the HFT pools because they're trying to raise the price, then go in. But the problem that the DEX is having, and the continued issue, this has been an issue since day one, is bots. And as we know, there are really technically no free markets in crypto because there's so much bot activity. As a matter of fact, there was a study done some time ago that the vast majority of trading is done by bots, not humans. So anyway, the open market's a little dangerous at the moment. So the average OTC volume is now $45,000 a day. And that's growing because the OTC system is so elegant, so well done. The ThorFi folks just continue to make it better and better. And it's so efficient that the DEX, being what it is with bots and Radio Shack issues, and we've had DEX issues outside of Radio Shack, of course, as you well know, it's just making the volume on and the adoption of the OTC just continue to increase and increase as well. We were having $320,000 of weekly volume on the OTC, which is we're going to call it 21%, it's 20.98, 21% weekly growth. That's 1.8 million, as you can see on the screen. Actually 1.85 million. But 1.8 million of total OTC volume is, by the way, that $45,000 of daily OTC volume is a 21.62% growth just from last week. The OTC has officially taken over the DEX in terms of volume. If you go to the new Dune Analytics at Ray built, you will see when you remove buybacks and you remove these front-running bots I described off of the DEX volume and you compare it to the OTC has taken over the DEX by and large. So you will see that not only is the adoption going up, it's increasing on a daily and weekly and, of course, monthly basis as well. I encourage you, if you haven't used the OTC, go check it out. We had issued a new update, I believe it was a week or two ago. And it's a first-in, first-out system. So what that means is previously to that update, people who listed on OTC, you could buy any listing you wanted, right? So let's say you listed tokens, you list one token, but you got 5 other people listing 20 tokens. Typically what happened is your listing of one token wouldn't get bought for a long time only because people weren't looking for one. They were looking for 20 or 5, right? Well, now with the first in, first out system, you have to buy the oldest listings first before the new ones can even be purchased. So it's a very fair, very efficient, very effective system. First in, first out creates an efficient queue mechanism so that every listing has to eventually get bought for the other listings to unlock. So it's actually even better if it was not already great before. So if you haven't used OTC, please go check it out. Give it a try. You know, it's taken right now, on average, we're looking at about a day or two for listings to get sold and cleared out. And that's with team sales. So it's actually very, very efficient. There's a significant amount of volume and the adoption is great. So you haven't used it, go ahead and check it out. Just plan your sales a couple days ahead of time and you will be just fine. You don't have to worry about DEX and front-running bots and all this kind of nonsense. So again, I'm going to summarize everything that we've talked about and looked at here. We have an 800 plus zone growth for this week, 4.5%, 18,000, almost 500 total zones. Getting there very, very quickly. Total open market buybacks is well over $1 million, 1,056,000 and 288,000 just in the past 30 days. Boy, it'd be great to have that into pools. I think most people would agree. Total value locked is over 5% weekly growth, $575,000. That's $11.876 million, just under $12 million in total value locked, which represents zone USD value. Total OTC volume is just under 1.9 million, 320,000 weekly volume, and 21% weekly growth. Daily OTC is 45,000. I believe we're at 37 just last week, so it's already up about $8,000 on the daily average just in a week. And that represents a 21.62% growth compared to the previous week, and of course over 600,000 raised OTC from the team which fights inflation, funds operations, funds treasury, more pools, more growth, more utility for the ecosystem. We also, of course, just real briefly, have 4.89% in weekly HFT performance. You don't see that data on the screen, but I do have those numbers in a raw format. As soon as the pool updates are finished, you'll start to see those update, and then we'll have them, of course, as well in the Dune Analytics updating frequently as soon as that is completed. I'm your host. Thank you for tuning into The Zone Weekly, the week of March 3rd, 2023. We will see you next week, and until then, God bless and take care. Thanks a lot.